Hello, and welcome to today's webcast, 2024 Revisions to OMB Uniform Guidance. Before we begin, I am going to play a brief housekeeping video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our slide deck and handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters from Moss Adams, Anita, Shah, partner, and Keith Pugh, senior manager. With that, I will turn it over to Anita to get us started.
Thank you, Laura. Hello, everyone. I'm Anita Shah. I'm a partner at Moss Adams, and I specialize in working on federal compliance, single audits, financial consulting, and training. I've been doing this for over 16 years now, and I was heavily involved in training when Uniform Guidance was first issued, and I'm happy to be back here again to talk about the revision. I'll let Keith introduce himself.
Thanks, Anita. Hi, everyone. My name is Keith Pugh. I'm a senior manager at Moss Adams in our assurance practice. I focus mostly on higher education, but in the general non-for-profit sector as well. So I'm quite involved in our single audits, like I said, especially with universities and colleges, but with all the other ones as well. Looking forward to talking with you all and talking about the revisions from the past year.
Thank you, Keith. So I'll start out with the overview, just background on Uniform Guidance. So Uniform Guidance, the OMB first issued Uniform Guidance in December of 2017. With that issuance of Uniform Guidance, that superseded OMB A133 and other OMB circulars like A89, A102, A87, A122, and a lot of other ones. We used to call it the Super Circular. And the idea behind this Uniform Guidance Super Circular was to streamline federal regulations, reduce administrative burdens for grant recipients, and reduce waste, fraud, and abuse of federal money. Then 3 months ago, in April of 2024, OMB issued these revisions, significant revisions to the Uniform Guidance, and this is now effective. All of these revisions, they're now effective for awards issued on or after October 1st of this year. In these revisions, there has continued to be more focus on reducing administrative burden for both federal agencies and recipients. And this time, instead of just calling recipients non-federal entities, they're actually clarifying recipients and subrecipients, which does help with creating more clarity for people to evaluate what applies to a recipient versus a subrecipient. And the Uniform Guidance revisions are more focused on more plain language reducing complexity, and believe it or not, they also want to reduce varying interpretation of the guidance by federal agencies. It was not uncommon when we would ask federal agencies what they meant by, in the specific uniform guidance, they would have a different, maybe one federal agency may have a different answer than another federal agency. So they're trying to create more plain language here. One thing to note is that federal agencies must implement this revised guidelines. They must codify it in their regulations in order for this to be applicable to recipients and subrecipients. And these federal agencies have to do this by October 1st, 2024. They may choose to early implement it, but we haven't seen that yet. We should soon be hearing from federal agencies how they're planning to implement this guideline. With that, we have our first polling question.
Okay, great. How familiar are you with OMB uniform guidance revisions? A, this is my first webcast on the topic. B, somewhat familiar but curious about more details. C, very familiar, but I need the CPE. I'll give you a few moments to respond. To participate, please click the button next to the answer you choose and hit submit. All right, going to give people just a few more seconds. All right, and here are the results.
Fantastic. I was expecting the second or third answer, but it makes sense, the second one. If this is your first webcast on this topic, I want you to know we are covering the revisions to the uniform guidance that occurred in 2024. We're kind of skipping over some of the basics in uniform guidance, but hopefully you get the gist of this with this webcast anyway. Yep. So one of the things that uniform guidance did this year in this revision is that they actually had a call out for tribal nations in a few areas. So one of the things they said is that the OMB is directing federal agencies to provide more options for compacting, contracting, and co-managing federal awards with tribal governments and tribal organizations to respect their sovereignty. At times, it is difficult for tribes to attract good talent for a variety of reasons, including reasons for being in more remote locations. So federal agencies want to create more equity, so OMB wants to create more equity, so they're directing federal agencies to allow for more tribal set-asides, remove some unnecessary limitations, reduce burdens wherever appropriate. They want federal agencies to respect tribal data sovereignty, allow for self-certification such as tribal enrollment numbers, and respect indigenous knowledge. Ultimately, in order to increase access and utility of federal funding and to increase equity of organizations that receive federal funds, OMB is directing federal agencies on these guidelines. They're also asking federal agencies to provide more outreach and technical assistance to tribal nations. OMB also wants to strengthen the full life cycle of the federal financial assistance program. So where they want to start is reducing the burden of applying for a grant. So NOFOs, or Notice of Funding Opportunities, should only include information, they should only be requesting information that is required for effective communication of program objectives. Federal agencies are required to plan, so they must plan to increase more accessibility of their grants, especially their competitive grants. NOFOs, the Notice of Funding Opportunities, should be limited in length and information that is being requested, especially for programs where the programs are for eligible applicants that have limited capacity. I mean, limited good talent really spans non-for-profit across a lot of industries. So that's an area that OMB is saying organizations should not have to strain their capacity to apply for federal funds in order to receive assistance. So they're trying to direct federal agencies to reduce some of that burden. So the Council of Federal Financial Assistance, or COFA, has developed a no-fail template, and federal agencies are required to provide a no-fail simplification plan to OMB by August 1st of this year. And they also are required to include their no-fails on grants.gov, agency websites, and they should clarify any requirements for Build America, Buy America, the BABA requirements. So federal agencies will start simplifying their no-fails in fiscal year 2025, so starting October 1st of this year, and then each year thereafter with a plan to ultimately follow COFA's template guidelines. So although their no-fail might not be exactly what COFA has come up with as no-fail template, they're required to streamline it and to make it more succinct so that it's easier for people to apply for grants. Keith?
Thanks, Anita. So I'll talk a little bit about post-award revisions, starting with subrecipient monitoring. Now, as a reminder, the Federal Funding Accountability and Transparency Act was originally issued back in 2006, but there's still quite a bit of emphasis on this, both from the organizations and the auditors' standpoints. Just as a reminder, all recipients of first-tier subawards of $30,000 or more are required to report to the Federal Funding Accountability and Transparency Act subaward reporting system, or it's called the FSRS. And there's still going to be compliance testing around the reporting elements of this. The Transparency Act requires auditors to make sure that data elements around the first-tier subrecipients and subawards include such things as the subawardee name, the DUNS number, the amount, action dates, submission dates, descriptions, as well as officers and their compensation. So these amounts will continue to be tested in a key area, and core data elements such as these will continue to be reported on usaspending.gov. So that you're going to be generally publicly available in a key element that auditors are going to continue looking at from this compliance supplement this year. Around the extensions and timing of the audits. So if you go to Appendix 7 of the compliance supplement, it includes info on all of the past couple of years, all of the waivers that have been issued. Unfortunately, there are going to be, right now, no new waivers issued in the current year. However, the cognizant agency may authorize an extension when the 9-month timeframe would place an undue burden on the auditee, and the OMB will coordinate with those agencies to ensure deadline extensions are consistent. Another thing to note within Appendix 7, there has been some updates to it because previously in the past few years, the information on reporting deadlines was really only around the 9-month rule. So 9 months after your fiscal year ended, the deadline is then. However, it was a little bit confusing with how the 30-day rule came into effect. Once the audit report is issued, you only have 30 days to issue. It has to be the earlier of those 2 dates. So this section did update that to include both the 9-month rule as well as the 30-day rule. I see a question about could I repeat the threshold? So there's really a deadline is going to be the earliest of 2 dates, and the 2 dates are going to be either 9 months after your fiscal year end, or 30 days after the auditor's report is issued. And so Appendix 7 really clarifies that. There's been no changes to that, but they tried to clarify that just because of the previous versions, it wasn't quite as clear. Another note around program income, the compliance supplement notes in that section that to the extent available, the auditee must disperse funds available from program income, including repayments to revolving funds, rebates, refunds, contract settlements, auto recoveries, and things of that nature. And those must all be exhausted before the organization can request additional funds and cash draws. Moving on to the next slide for threshold changes. So this is probably one of the more exciting slides and exciting changes. Unfortunately, it's not immediate. So if you're about to go through a single audit now and you have $800,000 of single audits, unfortunately, you still would be required to go through this. So I'm just going to go through each one of these since it's significant. So, and I'm not sure if the slide is not showing the titles, but in the column for $750,000 and below that, those are all the current amounts. And the column next to that, starting on $1 million, that's going to be the new threshold. starting for fiscal years beginning on or after October 1, 2024. So again, if you're a 6/30 year end, it's not going to be applicable for a couple of years, but it is something to look forward to. So right now, any organization that expends $750,000 or more federal funds is required to have a single audit. That will be raised to $1 million. Likewise, with the Type A thresholds also increasing. Some of the other changes are going to be around specific thresholds used. For instance, right now there's an equipment and capitalization threshold of $5,000 that's considered consistent. That will be doubled to $10,000. Likewise, the unused supplies threshold will also be increasing from $5,000 to $10,000. If you're not familiar with that, that really is just if you have residual inventory of unused supplies, if it's up to $5,000, there's really no rules around that. Beyond that, that's when the non-federal entity must retain supplies for use on other activities or sell them. But when they sell them, they must compensate the federal government for their share. So that amount is going to be raised to $10,000. The modified total direct cost will be increased from $25,000 to $50,000 of each subaward contract. And so again, for the modified total direct costs, this is how we kind of determine what's going to be used for indirect cost rates. So the government said if you add up your salaries, wages, fringes, supplies, et cetera, along with up to $25,000 of each subaward, that's going to be the calculation of your modified direct total cost where you determine your indirect cost rate. So that's going to be increased to $50,000. The last significant change is around the de minimis rates. And again, this is the rate that's applied to that modified direct total costs when your grant agreements are silent on what the indirect cost recovery is. So right now, organizations are able to take 10% of their modified total direct cost to determine indirect cost recovery. And once this is effective, that'll go up to 15%. I think there was a question on what it means for the modified direct cost. I think I hopefully defined that, but that is really defined by the federal government and how you determine how you calculate your indirect cost rates with their salaries, wages, fringes, supplies, et cetera. And now it'll eventually be up to $50,000 of each subaward or contract. It's not just for subrecipients. It's a calculation that everyone can go through. I think that's it for threshold changes. I think it's probably a good time to go to our polling question next.
All right, thanks, Keith. Polling question number 2, will the increased thresholds have an impact to your organization? A, yes, the increased thresholds will have a significant impact to us. Will reduce our administrative burden. B, no, the increased thresholds won't have a significant impact to us. B, somewhat of an impact. B, not sure yet. As a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions.
We expect for smaller organizations that increased Type A threshold will have a big impact, but maybe not much of a big impact for the bigger organizations. The capitalization and equipment threshold, the unused supply threshold will definitely have an impact to, I think, most organizations.
All right, we'll pass over to the results.
Okay. About what I was expecting in the answers. So a couple other call outs that OMB had for tribes, there'll be this slide and next slide, specific call outs for tribes that I'll cover. And the first one is regarding procurement standards. So finally, similar to tribes, uniform guidance, OMB is saying tribal governments can now similar to states, tribal governments can now follow their own procurement policies. So states were definitely allowed this, and finally they're recognizing tribal governments are sovereign nations and they can follow their own procurement policies. So after 10 years of experiment under the uniform guidance issued in 2014, now tribal governments, tribal organizations no longer are required to follow these specific procurement thresholds and methods that were required by uniform guidance. Also, the sole source justifications don't have to be limited to the 4 reasons that are stated in the uniform guidance. A big thing that's really good for tribes that are located in Alaska or other Great Plains or other remote locations is that they have removed the prohibition on using geographic preferences, which means now you can support your local community, your local economy by allowing for geographic preferences in your procurement. The one thing is that you have to follow the same policies that you use for federal funds as you do for your non-federal funds. So when you update your policies, make sure you're updating them for all funds. But one thing is that if a tribal government does not, or a tribal organization does not have their own procurement policies, they have to follow the uniform guidance policy. So that automatically they default to uniform guidance if you don't have your own policies. One more slide regarding a specific call out for tribes is the equipment requirement. So again, similar to states, now tribal governments they must use, manage, and dispose of equipment that was purchased with federal funds in accordance with their tribal laws and procedures. Now, if you don't have such tribal laws and procedures documented about what to do with equipment purchased with federal funds, then you have to follow the uniform guidance equipment requirements. The one odd thing here is that sub-recipients of a state and a tribe must follow uniform guidance requirements. So if you're a tribe and you receive funding from a state, make sure you're paying close attention to those award agreements for those requirements to evaluate what equipment policies you need to follow. Keith, back to you.
Thanks, Anita. So this is just a good time to set a reminder for everyone to start considering if they want to make some revisions to the current policies in place. We've mentioned that the equipment and capitalization policy along with supplies, and Anita just went over the procurement policy, which I program income as well. So those are having some changes in the near future. So it'd be a good time to look at your policies and consider, is our capitalization policy in line with what the standards set by the CFR and so forth? And a couple of other ones we want to call out is around internal controls in general. There's just been more of an emphasis on your cybersecurity protection, especially with personal identifiable information. So we really are encouraging organizations to consider how they're currently protecting their customers, their employees, and everything like that around personally identifiable information. Your policies really should reflect this as well. So it'd be a good time to start thinking about that. And the last one's more of a minor note that might not be applicable to a lot of organizations, but just in case, the cost of prizes or challenges are now allowable if they have a programmatic purpose or included in the federal award. So that could be an additional item to include into your cost going forward. So just something else to consider when you're setting your policies and making any updates for the near future once these start going into effect. And with that, I think we're on to our next polling question.
Thanks, Keith. Polling question number 3. Do you plan to make changes to your policies for the UG revisions? A, yes, we will be revising our policies. B, no, our policies are current. C, not sure yet. For those of you who would like a copy of today's slide deck, you can download them from the folder that says slide deck and handouts. We will also be sending the slides via email after the webcast. All right, it looks like we have a good amount of people who have answered. We'll give people a couple more seconds. All right, and here are the results.
Okay, I think This is a good sign. Sounds like a good amount of people are considering they'll be revising the policies. For the others, it just sounds like they might not be sure if it's really applicable or relevant to them, or some of these changes just might not be applicable to certain organizations. With that, I think we can move on to the next slide. And in this, we're really going to talk about kind of the organization of certain clusters and programs and the classification of what's considered high risk or not. I'll start off with the good news here is there are no new programs that are considered high risk in 2024 that the previous compliance supplement didn't already call out as high risk. And when I'm talking about high risk, I'm talking about certain programs that the government has decided are just more risky in general. Auditors are generally going to have to test those. There's certain times we can exercise judgment in determining what programs to test, but once something's above a certain materiality level, and it's also considered high risk, it's almost always going to be required to be tested. So it's nice to see that there's no new programs this year that the government's decided that are now new high risk. There's also certain programs that are no longer high risk, that they were high risk in previous years. We're listing those on the right here. And these largely relate to COVID funding. I think COVID funding is just starting to wind down a bit. So the government's decided it's no longer high risk. So Education Stabilization Fund has been high risk for the last few years related to COVID. Same with Provider Relief Funds, American Rescue Plan, Rural Distribution, the Homeowner Assistance Funds, Coronavirus Capital Projects Fund, and Disability Insurance and Supplemental Security Income. There's also been a few changes to cluster organization, things around community facility loans and grants, Clean Water State Revolving Fund clusters. Those programs still exist. They're just not going to be organized into clusters anymore. So this really mostly affects the preparation of your schedule of expenditures of federal awards and how auditors are determining which programs and clusters are in scope. We also want to note that there is a couple of new clusters in the current year around tribal self-governance and self-determination. So again, those are not necessarily new programs, but new clusters and organizations. So the CFA organization will be a little bit different, as well how auditors kind of organize what programs and clusters are in scope in the current year. Okay, with that, I'm going to talk about some changes to the student financial assistance cluster. There have been some kind of large changes into how auditors need to test this. So you might be experiencing a change in what the auditors are asking for. So I'll kind of go through what all of those look like. One of the bigger changes is around the disbursements portion of special tests and provisions. Auditors are now required to select a separate sample of students that had credit balances and test with compliance for how those credit balances were handled and reported. In previous years, the suggested audit steps really inferred that auditors should be using the same sample of students selected for eligibility testing. And so those selections may not have always had credit balances. So now if there's a material and direct amount of credit balances from students in a current year, auditors might be asking for that separate population and having a larger sample to test that those were accurately reported. One of the other large changes we noted was around incentive compensation. And this is more of a newer test in the last couple of years. And so they're just trying to, I think, clarify the standards in how we're supposed to test. Previously, the direction was really ambiguous and kind of almost inferred that we had to sample employees within various departments like the business office, student financial assistance, and recruitment. And we would have to look for their offer letters and incentive arrangements to see if there was any incentives tied back to recruitment and offering of federal aid. The revised language, however, clarifies that we really only have to test samples if your policies or documentation imply that there are unique incentives or bonus compensation given for recruitment activities. And so what this means is that auditors are now able to just inquire if there are any of those arrangements. And if not, then the sampling and testing might end at that point. So previously, they might have selected more information in actual employees, but that might go away as long as you don't have those kind of unique bonus compensation arrangements that typically are not allowed. A couple of other changes that are a little bit more minor. Additional sections is kind of no longer a standalone audit requirement. However, there still are some expectations of auditors to perform areas. So auditors are going to be reviewing instructional locations offered by the school that do not appear on their ECAR or the eligibility certification approval reports. It is no longer its own section, but it still likely will have some audit work being performed. Lastly, satisfactory academic progress is now going to have its own standalone audit, no longer standalone audit requirement. auditors are still responsible for looking at this and policies as part of the eligibility testing, but they're no longer required to make sampling considerations. So might be a little bit less work in this particular area, though they still will be asking for policies and procedures. The only other change we're noting is that the institutional eligibility is going to be its own separate audit step. The only significant audit steps for auditors is just to gain representation from management that they had no correspondence schools or correspondence courses or incarcerated students that are receiving financial aid. So it is its own step, but it's not going to be a large lift for either auditors or organizations to get through. So those were kind of more the larger changes with student financial aid in the current year. So you will see a little bit of a difference. There's also going to be some kind of new changes with respect to procurements. As a reminder, under the Build America, Buy America Act, each covered federal agency must ensure that none of the funds made available for federal financial assistance may be obligated unless all of the materials around iron, steel, et cetera, were used or produced in the United States. So, starting in 2022, your organizations must comply with these requirements for all federal and all awards subject to those requirements and incorporate them into subawards as well. So the non-federal entity must incorporate all these preferences and requirements in all applicable subawards, contracts, purchase orders, and products supplied under a federal award with infrastructure projects. And so auditors might be looking through these as well when it comes time to testing procurements. We also want to talk a bit about a recent study that was done on the Federal Audit Clearinghouse data that was done by the Government Accountability Office. So the government released a study very recently that talked about some issues they saw in information that was used. Some of these were as simple as the Federal Audit Clearinghouse could not currently identify recipients that should have submitted a single audit but did not. So they're considering that the OMB has not even designated an entity to conduct a government-wide single audit quality review since 2007. So that will likely be considered in the future as a large change. Another one of the more interesting findings that they noted is $1 trillion out of the reported almost $7 trillion of direct federal awards spent by recipients from 2017 to 2021. They were linked to single audit findings that were both severe, which means they contributed to an auditor's modified opinion, or material weakness, and that they're persistent. So within a 4-year period, 1/7 of all the awards were both repeated and both severe. So I think the main message from this study from FAC is that there's just more oversight needed. However, they also saw some issues with data being submitted to the FAC from the auditors and organizations themselves. So both organization and auditors are going to be asked to have more robust review processes when this data is being uploaded and submitted. That way, some of these issues will start to go away. And with that, I think it's time for our next polling question.
Okay, great. So yes, polling question number 4. After attending this web event, do you feel prepared for the upcoming changes? A, yes. B, no. C, almost there. I will be ready by October 1st when the new awards are issued. D, I'm still not sure and will likely need more help to get ready. Once you have completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the CPE progress window. All right, we will give people just a few more seconds to respond. All right, and passing over to the results.
Perfect. Glad to see that most of you will be ready by the time the new awards are issued on October 1st. And remember, we will be getting the guidelines from the federal agencies soon about how they're codifying this guideline, these revisions. So we'll have more information once we get that. So On my end, I'm not able to see the full key takeaway slide. Hopefully you all can see the slide. But biggest thing we would say is keep an eye out for the federal agencies adopting the guidelines, and then consult with your auditors or your accountants to be prepared for these revisions. Whenever there's change, it's always tricky to figure out when you can implement the change and what it applies to. So definitely please carefully review your award terms and be aware of which grants you're spending. Are they pre or post October 1st, 2024 grants? And be aware of which policies apply to and which policies need to be updated. The reason we had a shorter content for this is because we knew we were going to get a lot of questions on this. So now I think Keith and I will start with some of the questions that have come in, and feel free to type in your questions in the Q&A box. Keith, did you want to start?
I'll start with a couple related to SFA since I just covered that. So one is on question in regards to students with credit balances. Does it mean student with credit balances at the end of the fiscal year or each term? If each term, what dates, et cetera? So for this one, it's actually anytime there is a credit balance. There is a requirement that the university, whenever an organization there's a credit balance, the institution must pay the resulting credit balance directly to the student or parent borrower within 14 days after the first day of class of a payment period, if the credit balance occurred before that, or if the balance occurred if that class was after the last day. Your own institutions are only permitted to hold credit balances if voluntary authorizations from the students occur. So it is more involved in that. So typically in the past, auditors have looked at student account details to kind of look at the pluses and minuses and sees when those credit balances occurred. And if they did occur, was a payment made within 14 days of that. Another person had a question on where is the guidance. I think there's an appendix, I want to say 8. Oh yeah, so Appendix 4 is a higher risk designation. So within Appendix 4 of the current year compliance supplement, you have information on all of those changes to see what's considered high risk or not. Someone asked about what I meant by clusters. So within the compliance supplement, there is generally a list of all of the individual programs along with their assistance listing number. There's also the concept, in some cases, clusters. So for instance, student financial assistance is a cluster of all the various student financial aid programs offered to students. So multiple programs are all included within one cluster. So when auditors test a cluster, they don't have to test every single program within that. They just test it as a whole. So all of the student financial assistance different grants are added up to be a cluster amount. So we consider it testing as a whole rather than individual programs when it makes sense, because a lot of those requirements are very similar or identical. Anita, I know there's some questions on tribes if you wanted to go through those.
Yeah, I'll start with there are so many questions that have come in, so I'll start with as many of questions as I can cover. So one of the questions is a non-federal agency award. If a non-federal agency awards funds to a subrecipient, does that sub-award have to go out for bid? The sub-award itself wouldn't go out for bid because you're awarding this to a subrecipient. That subrecipient is carrying out the program's objectives on behalf of your organization, but that program or that subrecipient has to follow uniform guidance requirements or the policies that you set in place in that sub-award agreement. So that's how that works. So they may, if procurement is applicable, they may have to go out to bid, but that doesn't mean that you have to go out to bid just to provide a sub-award to an entity. There was a question about, DUNS and UEI. So the UEI is that unique entity identifier that is required for all subrecipients. Subrecipients have to obtain that, the UEI, but the second tier subrecipient, so if the subrecipient is then providing funding to another subrecipient, so a second tier subrecipient, they do not have to apply for UEI. And contractors of a federal award, so if you're contracting out, you're using federal awards to provide a contract to a to a consultant or let's say a general contractor, that they do not have to get a UEI.
I'll take another. There's a good question I saw about the 9-month and 30-day rule, whether or not that was effective for the date of the audit report or when the auditee receives the report. That's a really good question. So the compliance even tells us we have to look at either the 9 months or 30 days after the entity received the auditor's report. And that's, so hopefully the report is being issued the same day you receive it, but the rule is defined to determine whether or not the due date was met. It was based off of 30 days after you received the auditor's report. So hopefully there's not too much of a lag then. Someone else asked about whether the supplement was for auditors only. The compliance supplement really is kind of an audit guide, but there's a wealth of information about the general programs and about what auditors are intended to do. So sometimes it can be helpful for organizations to get a sense of suggested audit procedures and make sure that what their documentation policies are, because the supplement also includes a lot of references to the Code of Federal Regulations. So while the supplement itself isn't really law for organizations, it includes all the information that you need to consider, but it's typically mostly for the auditors, even though it is helpful for both. But auditors definitely read 1,500 pages a lot more than the organizations, what I would expect.
There's a question about the de minimis cost rate. So regarding the 15% de minimis cost rate, if our actual indirect cost rate paid by the fiscal year end is 14%, will we need to pay back the federal government or pass-through entity of the federal award, or the example, the state government, for the 1% difference? So it depends on how you have set up your indirect cost rate, but basically if your indirect cost rate agreement, if you have a carry forward or fixed carry forward indirect cost agreement, that carry forward, the adjustments will be applicable in the next rate proposal that you submit, or applicable to the 2-year rate period or 3-year rate look back that you're using. However, for a de minimis cost rate, if you are using 15%, even though your actual indirect cost rate may be 14%, you're allowed to still use that 15%, because for a de minimis cost rate, they're not looking back. They're not looking back to see what your actual rate is. It's not a provisional rate. It's a final rate that you use.
There's a couple of questions on the thresholds and supplies as well, so I'll cover those. So the threshold changes I talked about were like the single audit threshold, 750 to 1 million, and thresholds of equipment to capitalization from 5 to 10,000. That is unfortunately not applicable until fiscal year end September 30, 2025 and later. So if you're a June 30 year end, this would not be applicable for you until June 30, 2026 over that particular audit. But in general, it's for audit fiscal years beginning after October 1, 2024, or alternatively spoken, any fiscal year ending September 30, 2025 or later. There's also a question about what the materials and supplies threshold was about. And this isn't really a materials and supplies threshold. This is an unused materials and supplies threshold. So if within your grant, if you purchased, let's say, $4,900 of supplies, and those are remaining at the end of the grant and everything's already done, that is okay. However, once you have more than that, if your residual inventory of unused supplies exceeds $10,000 upon the termination of the project, and the supplies are not needed for any other federal award, then the entity must retain the supplies for use in other activities or sell them, and in which case they would compensate the federal government. So you really have to consider what to do with these unused supplies after $5,000, and the new threshold will be $10,000 in a couple of years. So hopefully that clarifies that part.
There's another question that talks about the threshold, but it relates to procurement. So the question is, does this impact the simplified acquisition threshold that's currently $5,000 for procurement? So if we're talking about procurement threshold, I'm assuming that this question is from a tribal nation, a tribal organization. And in that case, you as a tribal organization, a tribal government, are allowed to update your procurement policies and increase that threshold effective October 1, 2024 to whatever your organization feels comfortable with. So it does no longer need to be 5,000, which, by the way, a few years ago that was updated to 10,000. So it should have been increased to 10,000 at that point. But regardless, now you're allowed to, you don't have those threshold requirements. You can choose as an organization how you want to update your procurement threshold. And this is specific that I'm talking to tribal nations. I'm assuming the question is related to that. There's another question on thresholds. Our new fiscal year starts October 1st, 2024. We're planning to increase the equipment capitalization threshold to 10,000 effective the, oops, we got another question. I lost the question. Give me 1 second to go back to that. Sorry. There are a lot of questions, so just trying to sort through which one I was reading. So the question was basically for their fiscal, they're planning to update their equipment capitalization threshold to 10,000 from 5,000 as of October 1st, 2024. And what do they do if they're spending down a grant that was issued before October 1st, 2024? That is a fantastic question. And unfortunately, we don't have a clear answer on that about what to do about awards that are being spent down that were issued before October 1st, 2024. That is exactly where we're waiting on guidelines from federal agencies. And honestly, the COFA, the Council of Federal Financial Assistance, had issued FAQs on uniform guidance 10 years ago. It was the cfo.gov website. They had issued guidelines on this, and we're hoping that they'll issue updated FAQs on this once all federal agencies implement this to tell organizations if they have to keep track of which awards they're spending down and if they will be using different thresholds, or if they can use that new threshold for all awards being spent October 1st onwards. That is, the latter is our hope, but we don't have a clear answer on that yet, unfortunately. Keith, did you want to take the next couple before I continue on?
On the de minimis rates and whether or not that has to be applied for all, or if it can be specific grants. You might have some grants that already calls out what the expected indirect cost rate recovery is, and it's typically quite a bit larger than the 10%. So some organizations choose to apply that 10% to all and some don't. That really is up to your discretion. But I know a lot of organizations do try to be consistent with it. It's just, it's somewhat easier for them and also just easier to analyze as well. But I don't think there's a requirement to use it on all. I certainly know of some that choose not to use it as well. So you do have discretion for that. As far as being required to use the capitalization threshold, I know of entities that typically use a other, but it is a bit of a burden. So it might be easier for you to use the capitalization threshold, but I think that is just a threshold to help you. It is certainly not a requirement that you must be capitalized. You must be, expensing or passing on everything below that. And I know there's like a lot of questions on the timing of it. And again, this really is for fiscal year ending September 30, 2025 and later. And like Anita said, once we would have more information about, the changes of the past years, we would hope to provide clarity to that as well.
Wonderful. There are more questions on the timing of capital. So what do we do if we have equipment, that's under 10,000 and that's being tracked right now? Do we no longer have to track that if it's below 10,000 starting October 1st, 2024? Again, unfortunately, that is one that we don't have an answer to. We're waiting on federal agency guidelines to see what they'll do to consider all the outstanding awards. There was also a question about whether this guidance is applicable starting October 1st, 2024, or if the final will be issued in October 1st, 2024. The final guidelines has already been issued. It's in the Federal Register now, and that's already been issued from OMB, and it's applicable starting October 1st, 2024. However, what we're waiting on between between now and well before October 1st is our hope, is federal agencies to codify the OMB guidelines into their own CFRs to make sure that they are implementing it so that when they issue their awards, they're referencing their CFRs to provide you guidelines. We will definitely be issuing another article or webcast on this when we have more of those answers, because that's a common question that a lot of my clients are asking, and we unfortunately don't have the answer yet.
I saw a question. Are subrecipients who are under the audit threshold subject to additional monitoring by the grantor? Typically, yes. Grantors who give money to subawardees, they are typically required to perform both risk assessment procedures as well as monitoring procedures and evaluating results and financial reports. So even if you're under that threshold as a subrecipient, you likely should expect additional procedures to be performed by your grantor, because they are typically required to do that once they disperse federal awards to subawards, or subrecipients, I should say.
Yep. There's a question about when the new de minimis rate will go into effect. It will go into effect starting October 1st, 2024. So most likely for your fiscal year 2025 year end. So basically after starting September 30, 2025 year end. There's another question about, can you briefly talk about the compliance supplement? What is it? How is it helpful to auditees? Where auditee can access this supplement? Right after this question slide, Laura is going to go over some of the articles and helpful links that we have. That has a link to the 2024 compliance supplement. Basically, the compliance supplement is a document that federal agencies come together to they work with OMB to put together guidelines on what auditors should be looking at, whether it's, auditors, external auditors, so us or federal agencies as well. They look at this as well. But what should auditors be looking at to ensure compliance with requirements, the auditee is in compliance with the requirements? So as an auditee, when your auditor is telling you these are the programs we'll be auditing, you should be looking at the compliance supplement and looking at all of the different areas auditors will be looking at, and talking to your teams to make sure that they're aware of these guidelines. They should be aware of the guidelines because they would be in the award's terms and conditions, but making sure that they're following these guidelines so that we're well prepared for the audit. And sometimes auditees, you can also ask the auditor to point you to where in the guidelines they're asking for something, because they may be asking for something that may not be, there might be a different reason why they're asking for it. So you can also use it to be able to have a more helpful conversation with your auditor. So we're still getting a lot of questions. We have upwards of 70 questions. At this time, I think we'll try our best. A lot of these questions are questions we have already answered about the timeline of the thresholds and when they're applicable. Again, all of these thresholds are applicable effective October 1, 2024. The answer that we don't have yet is whether this is applicable to awards that were issued before October 1st, or if they're only applicable to awards issued after October 1st. That's the piece we're still waiting on to get from federal agencies. Again, we'll be issuing either another webcast or article to talk more about that when we have the answer there. Laura will answer the remaining questions that we couldn't get to via email. We'll follow up individually with people, but I wanted to pass it on to you now.
Okay, great. Thank you, Anita and Keith, for a wonderful presentation today. Like Anita mentioned, if we didn't have time to answer your questions, we will do our best to follow up with you after the webcast. Feel free to reach out to any of our presenters if you have additional questions. We invite you to visit our website for more resources and information on this topic, also like Anita mentioned, many of which are linked in your handouts window. Also, please be sure to join us next week for our webcast, Governmental Accounting Standards Board Updates, which will be hosted July 16th at 10 a.m. Pacific Time. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy of your certificate will be emailed within 3 weeks should you have any difficulty downloading now. Finally, here's a link to a survey for today's presentation. Your feedback is always appreciated. Again, thank you for joining us, and take care, everyone.